Okay, what's going on, everyone? So there were a couple things when I first started trading that I kept doing, and I just didn't recognize that I was doing these things, and it was destroying my account. I kept losing, I kept burning cash, depositing instead of withdrawing. It is such a better feeling to withdraw. And when you're down, when some of you maybe have traded a while and you're down a lot, and you might be feeling like, man, what's the fastest way to make it back? Well, I'm not going to sugarcoat it. Okay, you really shouldn't be in this game if you're thinking of it as a sprint. It's more of a marathon, but trading can be rewarding. So what I'm going to show you right now is just trading live with me real quick. I am going to pause the video and just, I won't let you sit here the entire time, but here's high time frame liquidity. Check it out right here. Okay, this is a high time frame sweep of liquidity. On a 4-hour, you can see the wick right below us. So we're literally coming down into this wick on this 4-hour right here, this candle. Underneath that, we have a fair value gap. Okay, so this is a 4-hour fair value gap. And the significance of that is that this holds a lot of orders still, right? So essentially what this is saying is that price moves so fast, it created inefficiencies, and most likely, we will go and fill this gap or a portion of this gap. Now, I like to mark the middle range of these gaps. This is a very good target. I also like this target here. So we have a couple of targets where price can reach. It can go to the wick here, which there is liquidity. There are stops underneath this level. Why does that matter? If you don't know what I'm talking about right now, you are literally in the dark as to why price moves. I'm just being blunt with you. You have no idea why you keep getting stopped out. It's the reason why your account keeps getting burned. And if you do know what I'm talking about, then why are you even watching this video? You must be profitable, right? Wrong, because you probably don't do what I'm going to show you in this video. Because even if you know that, there are things that you need to know on top of that. It's not just about ICT models, okay? Good luck. Go study ICT for thousands of hours. Good luck. You're not going to learn it like that. You're going to learn it by really seeing how to manage your money from somebody who does this for a living. So I'm just going to tell you right now, like, I look at these as targets. I look at these as areas where price might reverse. And there's a lot of people that take, like, what I've said before about inverted fair value gaps, and they go, well, why didn't you take that one? And it's like, well, did it hit a high time frame liquidity target? So take, for instance, today, this is like my chart from this morning. I trade live Monday through Friday. By the way, everything I do is transparent live with my community. If you want to join the community, link is in the description. I don't sugarcoat things, man. So if you're doing something dumb, I'm just going to tell you, hey, that's pretty dumb. Like, you need to wake up. So why would I take an inversion right here when I have no targets marked? Do I have any targets marked in this area? No. Now I have a target marked here. But did price inverse a fair value gap? No, it did not. And if you don't know about fair value gaps, then what you need to do is spend money on your education, okay? And get educated first. This is not a game, okay? It is a game to market makers, not a game for you and I, because this is real money. Now, I don't recommend you trade with real money when you first start, but what I do recommend you do is you get in some place where somebody's gonna be as transparent as I am and show you real-time trading. Not the whole, okay, here's what you should have done, here's why it did it. Nobody cares about that, okay? Only thing that people care about now is, are you doing it in real time? And you can see the minute ticker on the chart over here. These are the time ticker right over here. So this is real time. So what I'm looking for is I'm looking for price to hit a high time frame target like what we have right here. And yes, you can see I have SMT. For those of you thinking you're so smart with SMT, you're probably not even using SMT right. You don't just take any SMT trade, okay? I'm not going to go into, sequential SMT right now, but you don't just take every single trade that's on the chart. With that being said, what do we see here between the Dow, the S&P, and the Nas? What do you see? Well, I can tell you right now, it's not even showing me this Lux Algo SMT divergence indicator is not showing me. I can show you right now. I see higher lows, right? What do you see over here? I see a lower low, right? That's the S&P. Now, the Kraken correlation here is what I want you to focus on. Same time frame, right? 1 minute time frame, so low time frame. And then what do you see over here? Well, I see lower lows. Yes? So we see lower lows on the Nasdaq and the S&P, and we see a higher low on the Dow. So this is low time frame. This is very low time frame. Is the Kraken correlation during the same minutes, during the same time frame? Yes or no? Is it during the same time frame? And the answer, if I go over here, I show you the higher low and I show you the lower low, right? And you can see they are the exact same time frame, right? So is this a valid SMT? Yes, this is valid SMT. So we have a Kraken correlation. So now we have something that I've been waiting for here. It still hasn't happened, where price needs to really hit my high time frame target. The previous high time frame target was up here. I've just had to be patient and let price fall. So that's the part. And listen, the part where it sucks being a trader is that if it doesn't work, then you just wasted all your time. You just literally sat there and wasted your time and price didn't give you an entry. Too bad. That's trading, man. Go dig a ditch, right? So meaning like this is easy. This is like magic money buttons. You're clicking magic money buttons. So if you want to make money clicking magic money buttons, then you really just need to understand that, you know, you're not going to be able to take every trade. It's not always going to happen for you. And you need to be happy with that. You need to be so content with that. You need to be like, yeah, I'm so happy I don't take every trade. That's the way you need to be thinking about it, okay? So we have low time frame. Now what am I doing? I'm dropping down. I want a 1, anything down here on a 1, a 2, a 3, a 4, a 5. I really want to see a couple of things. Number one, do we get this liquidity tapped? Okay, did it reach my target? All right, and right now it's close. If it reached my target, I'm going to be looking for this next. I'm going to be looking for displacement. See how these candles create displacement? They create these fair value gaps right here that I'm going to show you on this 1 minute time frame, right? If you don't know what again, get yourself educated. I have a full course. Come in. It's the least expensive course and the most accurate and simplified that you are going to see on any type of ICT training. I haven't seen anybody do it like we do it. It's a 5-step course. So go in, take it, and your mind will be blown. I'm telling you. We have new traders coming in all the time, almost 1,000 members. You guys have never seen my face. I'm brand new on YouTube with trading videos. I used to do crypto. I've made hundreds and hundreds of thousands of dollars trading. I've made a couple $1 million trading crypto over the last few years. And I'm very, very passionate when it comes to this. I want to teach it in a way that you guys can understand. So when I look at this chart and I look at this, let's just say right here, we have this 1 minute time frame right now, down on 1 minute. I like the SMT that I'm seeing, but I just don't love the fact. So what I'll do is I'll come over here and I'll see, well, did the S&P take out that high time frame liquidity? And you can see if I mark halfway right here on this 4 hour, you can see it did hit. Yes. So, okay. So essentially, I'm looking and seeing like if that's a target, right? This is a target for S&P, and that got hit, and the Nasdaq didn't hit it, and we have SMT, and there's a inverted fair value gap right here. Well, then man, this looks pretty darn good, and I want to catch it on a pullback, but this looks like it could be going. So I'm going to enter up here. Okay, we're going to enter in on a market order. Actually, let me place it on the chart. Let's see here. So we're going to enter in on a market order. Let's go create limit market risk. We're going to go 2%. So we're in at this level. Now, if price pulls back to this spot right here, I'm going to add to this position. This is a more higher risk type of trade because I normally would be trading a 1% per, but we're going to go with a limit order down there. Okay, so I have limits set up and I'm in position. Okay, so what I'm looking at doing right now is writing it up to where do you take it? And this is what I tell anybody new that's trading, anybody trying to get profitable. It's less about your entry. You see me entering the market. It's less about that. It's more about your strategy on how you're going to manage this trade. Okay, so technically on this 1 minute time frame, we have not broken structure, and that is one of the 7 things on my checklist that I follow. But what I like about this is that if I go to an hour, you'll just see, like, look at this, like, we are not just going to go in one straight line all day, right? So I like the fact that we've displaced so much. So the pullback to these levels seems very, very probable at this point, especially since the S&P has already hit that high time frame target that I had mentioned over here. And if you see, the Dow is actually looking at possibly breaking structure to the upside, and the Dow has already hit major high time frame liquidity targets as well. So it's already completed its run. So I'm really looking at the pull right here being on the Nasdaq. Now, what do we have? Well, some people would look at this and say, okay, cool. We could basically go to the shelf, like I call these shelves, which are order blocks. And in this case, you could look at this as a breaker. So a lot of people would look at this breaker block and say, okay, I'm going to take it back. We'll see if we can get a pullback here. And this would be where they're going short. Well, if I'm seeing an inversion, right, on a lower time frame, let's say a 2 or 3 minute, and all of these are getting inversed, these fair value gaps on the way up, if this is inversing, if this inverses, right, I'm looking at that, which it already did. But, if price breaks these levels, these fair value gaps on these lower time frames, I go to 3 minute, I'm much more confident that I'm gonna actually see a real reversal. But it doesn't matter, guys, because what is my price target? It's inside liquidity. What is inside liquidity? Well, inside liquidity is, we'll just call it local liquidity, okay? So these are local liquidity levels. So right here, right where I have that TP is my local liquidity level. Okay. So, people talk about, oh, I make thousands of dollars in 5 minutes or thousands of dollars in trading in like 5 seconds or whatever. This is why, because once you have a trading model, you can actually leverage up your account size once you build it up, and you have to be able to execute. That's a big thing, is like a lot of people just simply will not execute. This trade has not, this trade is down here, this limit order. I still have it sitting, but this is the liquidity level that I want to target. Now at this level, and I'm going to push these higher, and there's a reason I'm going to push these higher, because what I want to do is create a partial take profit right up here. So what I'll do is I'll create a sell order. Okay. And in this sell order, I can see how many units I have. And so we're going to go ahead and sell off 50 of those units right there. Okay, cool. So I have 83 units in, and 50 units will be what I'm selling up here. These are micros. So I'm obviously, you can see the micro E-mini. So if you were trading, exactly what I'm trading, you would have the same result. So, the idea here is that you're put yourself in a position where, you're not over leveraged. You're not, you could see I was risking 2% of my account. So I'm not over leveraged. I'm not freaking out. And I do have an add-on, a buy ad right here, which is going to increase my risk. Don't forget, like 4 or 5% of your account is a lot. And I know that that's not sexy when you're dealing with like a couple $1,000s. But what I tell people is like, go to a compound interest calculator and type in like whatever amount of money you're starting with. Could be $1,000, could be 5,000. I do think it's smart to, save up to a few $1,000s before you start trading with live money. I think that that is a smart thing to do. I'd say 3,000 to 5,000 would be a good starting point, my opinion. Okay. You don't have to start there. You start with a couple hundred, but it's going to take you forever. And I would just focus on spending that couple $100s on your education and just use demo account. You need to get used to seeing larger numbers. When you rack up your account, like I have, to multiple 6 figures, you're at a place now where it's like, okay, now I'm dealing with some real money. Like I care about $5,000. You know what I mean? So here, when we're in a trade, what makes a difference between you and I is not my experience. It's not anything on the chart time, all the stuff people talk about. Oh, chart time. No, it's just your game plan, man. You don't have to have any chart time. None. Zero. But if you don't stick to your game plan, if you don't have a game plan and you don't stick to your game plan, you are going to lose, and I'm going to win. Most of the time, that's what's going to happen. People want to kind of trick you and say, oh, because I've been trading for 7 years, I know better. I do not know whether or not this trade is going to pan out. I have zero idea. I have an edge in the market. I have an entry model that I follow to a T, and you're seeing it firsthand. That's what I do. This is how I trade, right? Anything outside of that, and people want to argue, they can. I don't care. Oh, he says chart time, this and that. It's like, no, dude, it's not about chart time. It's about having the plan. If I gave you the perfect plan with the exact setups, which is what we do in our community, right? This is why so many of our members are winning that are brand new at trading. If I showed you that, it's on you whether or not you follow it, right? Now you can argue with me and say, yeah, but experience would make it to where, your mental state and all this. Yes. Okay. I'm not arguing with you there. Yeah, you're going to get better as your mental state and all that stuff develop, and you become used to drawdown. You don't freak out. You don't pull out of positions when you're freaking out. I get all that. But the point that I'm making to you is that you do not have to get hit by a car to know that it hurts to get hit by a car. So in trading, you don't have to come in here and necessarily fail right away. You don't have to. Most people do, but you don't have to. You can learn from people who do this for a living, like myself, like even other people out there. They do it, right? It's hard to find somebody who will show you real-time trading, but If you find that person, cool, sink your teeth into what they're talking about. This right here is it's a model, right? Do you understand? It's a model. It's not, there's no real formula for somebody winning all the time. So outside of this model, what do we have? Discretion. What is discretion? Discretion is my personal take on how I feel about managing my money, right? So do I close a trade right now? Well, by the way, that just entered my second position right there. Okay, here we go. Retesting this. This is a 1 minute. Let me label this for you guys. This is a 1 minute fair value gap. So this is an inverted fair value gap. So IFVG right there. Boom. Retest. Okay, I want to see that hold. Don't really care too much about that other one up there. I care about this one down here now. So if I'm going to win more than I lose, what does that mean? That means I need to lose less money than I win. I want you to say that right now. I want you to say it to yourself. Don't just watch this video and skip. Say this. I want to lose less money than I win. Once you embrace that right there, it's a very powerful concept. Now watch what happens. See, I'm leveraged up. Now watch this. So here's what's going on. On this 1 minute time frame, I have a liquidity target up here. Okay, that's my current inside buy side liquidity. I have no bottom wick on this 1 minute candle. So I want you to see what I'm going to do. I'm going to close a partial position here to reduce my sizing. Okay, so watch what I do. I'm going to close 100. So let's see if we can get a little bit more of a push. Cool, right to that shelf right there. These are the type of discretionary things you have to be okay with. Look, this is a shelf. If we don't pass that, I'm in a lower part of this range. If we do pass that, then we can make it up to this liquidity level. And I'm going to put my first TP down there as well. So that's also what I'm going to do. So these are things that how I manage my funds, how I manage my money, how I manage this trade. That's the difference between you and I. That's the difference between, making money and losing money. It's less about this entry model and more about what do you do post execution. Okay. So look, that's the deal. That's when you talk about people making all this money in a short period of time. Yes, it comes from experience, but also just, you don't even have to have experience to know that it hurts to do things the wrong way. So stop buying at premiums. What's a premium? Up here, stop being dumb. When price is green on the day, look for sells. When price is red on the day, look for buys. You're going to get much further when you just embrace that model. Like all these guys talking about daily bias, it's confusing you. You're literally thinking to yourself, how do I know what direction price is going in for the day? That is so dumb. Stop focusing on that shit. It's not going to help you. All right. Daily bias is such a subjective thing. You could talk about liquidity sweeps and liquidity targets, but that's all you got, man. I can show you where liquidity is on a chart. You don't got to pay $1,000 to see that. That's easy. It's after it hits the liquidity. You're not trying to, look, there's a difference. You're not trying to necessarily react, because reaction is a form of, non-self-control. It's a form of you're not planning your trade if you're reacting. Does that make sense? You're not mentally strong. You don't have the mindset if you're reacting. So I like to think of trading as predicting. I do. I like to think of it. You're predicting. But when you talk about trying to just predict what direction the market's going to go in, you can't do that. You only have liquidity targets. And what I focus on and what I think makes it to where I have such a high win rate is how I manage after these liquidity targets get hit. So now take a look at this trade. All right. So we're up, we're looking pretty good. I could reduce my stop loss. I could put my stop loss at break even, right? I could put it halfway. I could take a little off the table. There's a lot of things I could do here. So what is the right thing to do? Well, what I like to do in these cases is see, is there a reason to get out of the trade? Okay, A, we have not broken structure yet. I don't like that. So I'm going to go with the things that are against me. I don't love that. You see, we are making a higher low here. We failed, right, to get higher. So I reduced my contract sizing because of that. Remember, I was in 2 orders. Now I'm in 1, meaning, well, I was in a lot of orders, but I'm in 1 position, right? So the other thing that I don't like about this is that we haven't broken this previous high. And even if we didn't break this high, I would like for this to push. I don't want this to fail swing. And so what do I look at? I could go down even on a 30-second, and this is how you can manage these real tiny scalp plays. And I can say to myself, well, here's an inversion right there, right? I'm sorry, not inversion, a fair value gap. So I can say, hey, look, if that gets inversed, the chances of it coming down a little bit more are higher. Remember, price is fractal. So what happens on these larger time frames happens on the smaller time frames as well. So in this case, if I'm not able to hold and maintain above this 1 minute fair value gap, this nice little bullish candle on a 30-second, then that is an early indication I might want to shut down my trade and look for a different position. Now, some people say, oh man, that's too much management. I don't know. That's so discretionary, yada, yada. And it's like, look, scalping is not for the weak of hearts or minds. Now, if I were swing trading, which I have a swing trading group, we did 6 trades last week, all 6 won. All 6, 100% win rate. I posted them. I post them before they happen. I post the exact setups. You guys can check it out. It's legit. But I don't really love swing trading like I used to. I love it in the sense of it's fun to win, right? Here we go. Nice bullish candle breaking out, respecting that 30-second fair value gap, and everything's looking good off of this one so far. So now I just need it to break. I need to grab my buy side target real quick. But the point that I'm making is that these setups are fractal. So you can find them on higher time frames as well. Okay, so price moved up, tapped right here, didn't quite make it to the wick. I'm going to move down I'm going to modify this order a little bit. If it makes it right back up there, I want to sell off a partial position here. We probably will, this is more like a range wick. And these are things that, look, all this other stuff that people talk about, even me saying as a range wick, it doesn't matter. Like none of that stuff matters. Literally, the market is designed to confuse you. Let me make something very clear. There's something called the inversion theory. And what the inversion theory talks about is that the market makers, the brokers especially, the brokers will sponsor people to make false information, and they've been doing this for years. If you've ever been on a broker, they'll say, oh, come to our trading seminar. We're going to teach you how to trade. You think the brokers want you to know how to trade? You're an idiot. If you actually think that, you're a moron. Like, you have no idea how this actually, the business works. They make money from you failing. They make money from you losing, not winning. So, they host these events and they seem so wholesome and, oh, it's so great. I'm going to go to this trading seminar. I'm going to learn how to trade. The reality is, and there goes my first T profit. So we reduced our leverage. We took some profit right there. That was nice. Okay. So right now up $1,300 still. So it probably took like 1,500 on that, or 14, something like that. So long story short is you need to understand you're being taught the inversion theory, which is the false information on how to trade. Your first 6 months when you get hired at Goldman Sachs, not that I ever was, I don't have my Series 3 or a license. So technically a professional trader, the term professional comes from trading other people's money. So unless you're trading other people's money and you're certified and it's legal, right, you're not technically professional. So I'm not a professional trader in that sense, but I've been trading for 7 years. And, one of the things that I've seen time and time again is like these simple ideas of, MAs and RSI and MACDs, these simple theories of how people are making money using these trading strategies that you can find on YouTube, 99% win rate, all this stuff. And it's just like, they just give you indicators. This stuff is false, man. And, momentum in the market and all this. The only thing that matters in the market is making money. That's it. So if you're a market maker and you want to go long today, then you need to push price down in order to fill big orders, massive orders. Okay. So push price down. It won't take that much money to actually do it. You'd be shocked, right? And especially individual stocks. And certain stocks like Nvidia, Apple, Google, Microsoft, the list goes on. If you can push them down and they break certain support or resistance levels, it'll affect the Nasdaq and it'll affect the S&P and it'll affect the Dow, right? And so long story short, you push the market down into these big pockets of liquidity, then you place your orders and then you push the market long. So all of it is based on deception and manipulation. Literally everything in the market is based on a lie. Everything. So the faster you understand that, the faster you're going to be profitable, and the faster that you'll understand at least how these entry models work. Now, here we go. So I pushed my take profit up here, but honestly, this was sort of my first level that I was looking at. So I am going to reduce. I'm going to partially close this order. So I'm going to go with 20 contracts reduced, and then I'm going to move up my stop loss right underneath that shelf right there. Okay. So now this is a risk-free trade, and I am actually going to push my take profit up. Okay, my TP up. I want to try to get a runner here, see if we can get a runner. We've been selling off for a while, so maybe we can get a runner at least until this, into this zone. And this is where I got this from was let me see, I should have labeled it. I think it was a 5 minute. Yeah, it's a 5 minute order block up here. So price could come up here and tap this 5 minute order block and turn right back around, or it could just take me out, and I'm perfectly fine with that as well. A nice little win. But the point is this is how you make thousands of dollars trading. This is what you see all these YouTube videos doing. So I figured I'd make one, but I do it in real time to show you the difference. There you go, risk-free trade done. The difference between me and somebody else is not the entry model. It is not necessarily the strategy. There are tons of ways to make money trading. It is like 100% how you manage your funds, how you manage your trade. So when you're in a trade, you need to have specific targets and you need to have rules. For me, it's did price break structure? When do I get out? You're holding trades in drawdown for too long, and you're not holding trades long enough to let them run. That's your problem. That's most people's problem. That's 99% traders' problem right there is, you get taken out and you're like, oh man, if I just held a little longer, it turned and went in my direction. So you end up holding your next trade and it just goes against you all day and takes you out. That's what happens. So get in our community. Click the link in the description. That's what I can tell you to do, okay? We literally have the formula down to a science. Everything that I do right here, I do live Monday through Friday. Come train with me Monday through Friday. It's hands-on. It's one-on-one. You can come off of mute and actually talk, okay? This isn't some YouTube 20-second, 30-second delay BS. Come in. Get on our Zooms. It's not Zoom. We use Butter, but it's the same thing. But you come into our Butter meetings and you start killing it, okay? So, long story short, I want to give you this kind of rundown. I want to show you why I enter. I want to show you how I enter. I want to show you how I manage. And that was real time right there. And I'll do some more videos like this. If you guys like it, comment, and I'll do some more videos like this. And watch my other video that I just put out. If you don't understand this setup, watch the video that I just put out. That'll put it in perspective, because none of this will even matter unless you understand liquidity. And that's the video I just put out. It's like literally this is pointless unless you understand that. So I will see you in the next one.